Sorry, love learning. I talked over you.
Oh no, no. I was just trying to sneak in so I could make sure I get record for backup.
Nice.
Yeah.
Oh,
Hey, thanks.
So I'm looking at a liquidity sweep here for a ride down, catch this alien.
So, friend, I was so convinced on my bias that it's gonna sweep the highs that I didn't take a few shorts that I seen. So it does not have to sweep the high.
No, it already swept highs. You mean that highway up there?
Yeah, the 17.0. I got to memorize 17.071.5.
Yeah, when you're bullish, that's what you're looking for. But at the same time, you're gonna let price action tell you that it's in agreement with you.
Because I kept seeing the shorts. I had the fair value gaps that kept like getting rejected, but I was like, no, it's got to go back up there. So it kind of like blinded me.
So just like I was saying last night with your analysis in the monthly time frame, you have a good solid direction of what you want to see. So what you want is price action to build the framework around your idea. Okay, because price action repeats, it'll do a specific criteria to let you know that you're on side with your idea. So just like how you had an idea, but the price wasn't exactly in your favor, right? So when you start seeing price do the exact opposite of what you are expecting, then you know you're offside and you got to just flip your analysis upside down. So, for example, when you were aiming for up here, the 1 hour had hit the bearish order block here and then made a bearish order block here. And this is where I was saying, 2022 model in the 5 minutes. So that bearish order block in the 1 hour was the 2022 model that took it right into liquidity, made our double bottom here. So if you wanted to see that top taken and price did not close below that candle, you would have gotten a candle snapping up, and then you'd be using this as support, which we still might get because we've now got, I have an idea that I would like to see price come down here into our discount in internal range liquidities. So that's my bias. However, because we got this bullish order block after dipping into this fair value gap, we might not see that. So I want to see price create the framework around my idea. And that's how I know that I'll be on side. So dropping into the 1 minute time frame, we've got kind of a money printer going on. So we've got a lower low here than these lows here. So liquidity sweep, nice, comes up, breaks market structure. So we'd want to see these two chubby candles hold support if we break two and through them. And we basically did. So we're above half. So that's, good if you're bullish. So I do want to see these highs swept. And then I want to see a dump because we got our idiot box right here. We've got an accumulation zone here. So my eyes are down here and I want to see the top swept first. And then I want to see that framework being created. So between the 1 and the 5 minute and all the minute time frames in between, once it comes and sweeps these highs, what happens? Does it hit the bearish order block and that volume imbalance I marked off in the 1 minute, and there's one in the 5 minute as well? Does it hit that and get immediately rejected and start making bearish order blocks? Or does it snap to and through and come right for these highs? And this guy right here, there's another one. So it's all about being able to read price and have it be in agreement with your idea. So now that a lot of you are here, I took 2 trades on my live account today and blew them both. So it was in the 5-minute time frame. And I was long on this as soon as it, I didn't care about a little bit of drawdown, but I was long on that fair value gap open right there. I wanted to see it hit and then run. It did not. This candle came in and stopped me out. And maybe it didn't stop me out right away, but I added again. And I was in with 2 contracts and then it stopped me out right there. You can see right here. So there's my entry right there. And then my stop out is below the entry. And then I said, forget it. So that was one trade. And then I got stopped out on both those contracts. I know I did. Hold on a sec. Something's not making sense here. Or maybe it was all the same trade. Buying that up close candle and then getting, anyway, I got stopped out of what I consider 2 trades. Trying to play this fair value gap and it wasn't in my favor. So I stopped trading, right? That was it. So $600 loss for the day. I'm going to eat it and I'm going to lose professionally on my live. And yeah, say la vie. December's garbage, so I'm not going to sit there and chase it and try and keep playing stuff that may or may not go down for me. I did do some eval stuff though. So this is that eval that I got from Buddy. One of my students gifted me a 50K eval. And took a little scalpy poo here. So my entry was rate slamming down off of this mitigation block and then a re-entry as it started cruising down past once it got rejected. It started rejecting off that mitigation block. I was happy with that. Not a perfect entry, playing it cool, letting price tell me what it's going to do. So it hit that fair value gap and got rejected and didn't close above half the mitigation block. So everything was cool. We got that slam down here. Okay, bearish order block comes back up in here, hits half of it, gets rejected, starts trading down. I sell short again. So that was my pyramid, 2 contracts here. And then it came back up. So 2 contracts basically in the same area. Once I seen this displacement with this fair value gap, I was hungry. I was like, yes, that's good. So just showing you guys not perfect entries, but still, low hanging fruit objective. Took that low there, seen some slippage, and then took 3 off here. Yeah, that's right. I took the majority of it off there and let that one go, and stop loss was at entry. So my leveled out entry, you can see it was at 699,575, and my stop out here was 699,550.
Yeah, I have no idea what he's talking about.
So I
He doesn't
covered.
even pay.
So I covered my fees on that one with getting stopped out in 1 tick. And so that account is up. So sweet. And then I still had that eval on Ninja Trader, which is being rude. And I'll just show you the screenshot. Because Ninja Trader's being rude to me. It's all translucent. It's weird. So I took this guy here, cruising back up. I seen this bearish order block. I had a good feeling that that bullish order block here, this is a 30-second time frame. There's a little vacuum block in there. Okay, once we got that one single clean pass through, I was sold. So when it started going up, I got in and got out right at the freaking high there. And my mom goes, "Why didn't you leave a runner?" It starts dumping. I'm like, "That's why." um, it was actually this run up here. And once it hit this bearish order block, I was out. It didn't want to crash through. It started rejecting. I got the hell out. So this is something we want to see here. So we just dipped into that liquidity there. And now I want to see displacement here. Filled that fair value gap up perfectly. Closed above half the fair value gap. And so we want to see a nice snap right through these candles here if we're going to be bearish. Otherwise, we snap two, but not through this. So this could be our breaker. That would be bearish breaker. Sorry, bullish breaker. So because of that 1 hour order block, let's check out on that. So far seem to be respecting the rejection block. So inefficiency to liquidity, we could see that taken. So what happens when we get to this guy here? We're above this fair value gap. So that's our inversion in the 15-minute. Lead stiletto and 200 on my lunch. That's awesome. 1 minute, Matilda. Oh yeah, yeah, absolutely. That was gorgeous. I was watching that print as it was happening. Just dipped into this liquidity. Freaking perfect. Nice eye, buddy. This is textbook right there. Like it doesn't get better than that. You got your high, lower low, higher high, bullish breaker, boom. Right to liquidity, dabs into this inefficiency first, balances out that vacuum block and rips. It's gorgeous, gorgeous stuff. So we're at that 1 minute draw on liquidity. So now I want to see a snappy rejection here. There is one more up here. It's tiny, sneaky little bugger. So we got to take that into consideration, but that's right at our bearish order block in the 15-minute. I like the idea of it cruising up till about 130 and then start tanking. No inefficiency up here in the 5-minute. This could totally be one of those head and holy shoulders where it comes right back up. So this is a good example today of having a bias and searching for the framework that's going to tell you that you're on side. So we'll be looking for a bearish order block when it gets up in here.
How come you're not setting limit orders there?
Putting limit orders where? At the bearish order block?
Like at 786.
The bearish one?
Yeah,
Thanks, man.
where your red line is approximately.
Because like again, I have a bias of what I want to see go down, but I want price action to tell me that it's going to go there. Okay, I want to see displacement and I want to see a bearish order block. Okay, so if price, let's just say, for example, let's say price is programmed to come down into this double bottom. It's going to create a framework, a very specific criteria in the candlesticks. Okay, so for example, this fair value gap in the 15-minute time frame right here. What was it, the 1 hour? Aha. That's not even the right size. Where did I get that box from? Is it the 4 hour? No. Well, that box is from somewhere. Huh. What happened there? Still same. So when price was up here, it was programmed to come down here and come into this fair value gap and trash people. So we want to see a framework around that idea. So we got a pumpski poo here. We got our low here. We got our inefficiency here. So everything's awesome. We don't get a up close candle closing below after a liquidity sweep until here. So here's your swing high, third candle closure, confirming your swing high. Never gets taken. This candle closes below an up close candle. This candle here finds a high at the order block and then trades right into liquidity. It's going to build a framework, a specific set of candles that's going to tell you that it's going to rip, just like in the 1 minute time frame, how it dipped in back into this inefficiency, dipped into liquidity. Then you got an up close candle closing above a down close candle. This is the framework right here. That's your bullish order block. If there's a fair value gap in here, even better. But this, look at where candles find a low. That's your entry. You just swept liquidity. You got a change in order flow direction. It's programmed to come in here and grab liquidity. You're counting on it too. You can bet the farm it's gonna, so to speak. Don't bet the farm. At least to an opposing swing high. Now there's one right there. So if you grab that and take it just to there, that's payday. Okay, and then your runner, or maybe you have two, I don't know, but that's 129 ticks. That's payday. So it'll build this framework on the way to liquidity. It makes a specific signature. Look at that gorgeousness. Leaves a fair value gap. There's your breakaway gap. There's your breaker. Okay, what do we know about breakers? We know that price will likely not come back below a breaker, right? So there's your high, lower low, higher high. Where does price find a low? Okay, so you're counting on this to be a breakaway gap. So you're using the next fair value gap as a measuring gap. So you take the bodies from the breakaway gap, measure to the measuring gap, which is your next fair value gap, and then you put your extensions on. So from here to here, there's your measuring gap. There's your first target. There's your second target. There's your third one. Oh, sorry, that's your first target there. But it was already hit, really. Boom. So, yeah, there's your lesson in breakaway gaps. What was your original question? Oh, yeah, the framework. It's going to do a specific thing. It's going to tell you, hey, Jesse, I'm going up there now. And then you'll be like, oh, okay, bro. Here, just let me hit you up.
So we're looking for an impulsive move, like from here right to that 786, and then short it from there, no?
If it provides the framework in these candlesticks, yes. So we're at the 786 now. We've stopped at the volume imbalance in the 1 minute. We're allowing it to come to the 15-minute order block if it wants to. But we're still at these levels. This is where we're looking for the thing.
Why wouldn't we be going for the 786 from the ultimate high?
Because I never do that. We never do that, bro. Ever. Never, ever, ever. It's always the one before the big one. I do it the same with bullishness, bearishness. If let's just say we didn't make a swing high here, and let's say price came all the way up to here. Okay. If it came up to there, then I would move my fibs. Okay. If it was all the way up here, if it came even deeper, then I'd pull from the wicks. But it doesn't matter. It's the fibs are irrelevant, man. That's just framing the idea around the trade. There's nothing magical about them. What's the real work that's going on in here is the order blocks in your 15-minute time frame, right there, bearish order block. Okay, price came up in the 4-hour time frame here. Oh, shucks. And rejection off this order block straight to this candle's wick here. What was it? 1 hour.
Yeah, because we got a small fair value gap right around there, in the 5 minute, like a super tiny one.
Okay, so price came up, hit this order block. It dipped right deep into the fibs. Okay, that's literally as high as you can pull. Okay, it dipped deep into the fibs. Broke two, but not through, but got rejected from the bearish order block perfectly. Not the fibs, the candle.
Okay.
So we're looking for a specific framework around our bias and our direction. And that's what we engage with. If we don't see it, we're offside. We don't have a trade. We will see price in agreement with what we're doing. If and that's where the skill comes from. Not just going, okay, I see highs up here, and this ugly, that's not the order block. That is the order block. This is not, this is garbage. This is ugly. Right? So it's not building the framework to run up here. Right? It's fine if you see this equal highs, that's cool, but you want to see the framework and it's building it here. So that's why I see this as an idiot box. It's accumulation zone, leaked from the liquidity grab into lunch. So this would be ICT's one setup for life, where you take the high or the low of the lunch or the high and then run for the other side. That's what I want to see. Kind of like yesterday. Oh yeah, let's go over yesterday. That was hilarious. So I was long in here and got stopped out. And Buddy was asking me why I was long, and it was just like, it looked like it was going long, and it was a high resistance run. It was really ugly until the last little Hail Mary there ran right for my targets. not before making a double top, tricking traders into going short and then running out their liquidity, of course. I seen the money printer model, and that's why I was long. Okay, and this is going to happen sometimes. Sometimes you're going to see everything gorgeously and it's going to wreck you. This is CPI. Or sorry, yeah, well, it's CPI too, but this is unemployment claims. You'll see a dip into liquidity, a break in market structure, a retracement to the breaker, boom, wrecked, stopped out. And then it went for my targets. Okay, so the draw on liquidity was correct, but this is the exact type of thing that happens during these specific Fed releases where you'll see everything perfect and it'll just bink you out before going your direction. So that's why it's, just wise to chill out. But oh yeah, so it built the framework. That was the point here. It built the framework around the idea of it going up. It dipped into liquidity here. We had a couple order blocks, breaking market structures, great. Another dip into liquidity here. Comes up, does it one more time. That happens. But still, another breaking market structure comes down into this fair value gap just by one tick past that swing low there. Institutional order flow entry drill starts trading up, down close candles, supporting down close candles all the way up. And, went right for the relative equal highs and even more so here. But it built the idea around the entire thing. So go to the 15-minute. And you can see here, you got your dip into liquidity, candle closing above that down close candle. This one did come right down and stop everyone out. It will happen. Comes right back up and expands, closes bullishly. This one finds a low right at the order block. Another opportunity. It provided one more opportunity. I said, forget it. Closes here. Candle opens. Closes above that one. Where does this one find a low? Bang. Everything looking good. If you're cramming your stop losses up, this might have got you. If you were entering on that, it might have got you. But eventually ripped right up for this wick here. So not textbook beauty, but still the framework is here. We had an idea that we wanted to see higher prices after a liquidity sweep. It's a Fed release, so we're not considering this as displacement. We're more so looking at a seek and destroy profile. That's our expectation of a Thursday. So after you dip into liquidity, what are you looking for? The framework, the idea that we're going to go up. So same as to be said here, come down, bullish order block, supporting price. Again, bullish order block, supporting price. This is a propulsion block as well. Order block within an order block, comes down and just starts going off. The algorithm was programmed to go here, and it built the idea. It did the framework that we'd like to see for it to come up here. And then it fucking went kamikaze mode. So lows here. Well, I guess it just dipped into that low there. So it was programmed to come down here, and then we go into the 5-minute time frame. And we totally seen this happening as it was printing. I was kind of in the mood and going off, but you got your stop hunt. You've got break in market structure. You got a retracement here, 786 being respected. And then it does our framework. You've got a up close candle with one nice clean slam down here. Bearish order block gets retested perfectly and then snaps out of proportion to liquidity. And then again, rinse and repeat. We just dipped into liquidity and there's the framework right there. You've got your swing low here. Snaps up, closes above that down close candle. Where does price find support? Right there on the order block. and starts trading up. So like, it's fine if you want to just sell short or long 786s, but if, I'm trying to get you guys to really read the candlesticks properly. And that's the whole point of this. So like, you guys are beyond the money printer model. Just put it that way, right? The money printer is just specifically, look for the fib retracement, buy it or sell it. So even, yeah. I snagged that too right on. Is this where we're going? 5-minute fair value gap? Yeah, that would be was that this guy over here somewhere? If it wants to really, really get going, yeah. So we're at 130 now. So this is where I'd like to see the reversal happen if we were going to get one. I'm glad you emphasized that. Even if the money printer is successful, there's more to this. Yeah. The word of the week framework. Yeah. Yeah. So like even in the retracement itself, you'll see a Matilda in the retracement. So like this guy here. So this is why I never pull from the absolute lower high, Jesse. You might miss out. Okay, I don't pull from the wicks, pull from the bodies. And you can see why. So as price snapped down into here, what are we looking for? Matilda. Okay, takes liquidity, double bottom, triple bottom, relative equal lows above a 786. That's total bait. Buying pressure. Snaps down, boom, hits the 786 finally. Now we're looking for the thing. Now you can just buy that. Okay, don't get me wrong. You can just long that if you want. And this specific little bit of candles here was kind of, rude. They were so big that if you didn't buy that 786, you would have missed out on some ticks there. But so there's the Matilda that finally took liquidity at the 786, and that's what you're looking for inside of the retracement. And once it builds this framework, you have a good inclination that price is going to want to come up here. And if you don't see the signature, then you don't see it. So let's talk about the one setup for life. It was kind of rude this morning. We didn't really get the manipulation phase that we love to see right at 7 a.m. So not a big deal. A nice form of continuation though. We've got down close candles supporting new down close candles. News release opens up, or was that just opening bell? What time was Fed release? I can't even remember. Was it 10? Yeah, it was 10 a.m. So that was just opening bell shenanigans, I guess. So there's the absolute low there. So let's find the impulse. Let's go back to the 5-minute. So the impulse off this consolidation here was right here. So even though we didn't get a military grade 786 retracement, it still came down into our zone. Not perfect. Yeah, that's a little better. So you've got a high, lower low, higher high. So this fair value gap, we will consider a breakaway gap. We don't want to see it priced to. And so came down into our zone, did the thing, made a swing low, started trading higher. You might not have grabbed that. Okay, it's not going to be super duper perfect every time. But as well, I wanted to mention if you are in a continuation mode, you can use 8:30 a.m. as your opening price. Okay, so this is a new 90-minute candle, and that new 90-minute candle is going to want to make a tail if it's bullish. So we can use the, oops, I guess it'd be here, but still same. We can use the opening price of 8:30 a.m. as our 7 a.m. if we're in a continuation mode. And sometimes this is going to happen. Just one of the slight differences of the setup. If you don't have a manipulation phase, use 8:30 a.m. as your manipulation. Okay, if you don't see one at 7 a.m. How you can gauge this is if you're bullish, and just flip if you're bearish, when Asia's lows get taken out in London, especially in the kill zone like that, and you're just trading up, and you got a target idea, it looks like it's built the framework. You're looking at your equal highs as well. You're looking up here at your equal highs and your order blocks, right? We're playing the PD array matrix. So that was our bearish order block that we hit in the 1 hour time frame. So once it starts making our framework, we're going, okay, well, it made the framework in London and it just keeps going up, right? Typically, we want to see London do nothing. We want to see London do this. And then we want to see New York slam, right? We want to see London do relatively nothing. Again, here, London doing relatively nothing. This is what we'd like to see. Again, London doing barely anything. There's our framework right there. Again, London doing nothing. New York dipping into that liquidity, and one more dip before the rip. Again, London barely doing anything. And then New York, stop hunt, swing break, retracement, breaker, 2022. Again, London doing nothing. New York doing nothing. Dips for the PM session. And then that's an anomaly. But you get the idea. So when you do see London dab into frickin' Asia's lows like that and then build the framework, and it just down closed candles keep supporting down closed candles. By the time you get here, you're like, okay, well, I guess it's just going to keep going up. What do? I didn't get that stop hunt. Maybe you even seen this as a stop hunt and this is the swing break, but we are in a discount, and we were below opening price yesterday, okay, of the week. So take that. So that's another little moving part to the fractal jigsaw. Okay, we were below opening price on Monday, and then we weren't. So what are we doing? What are we doing today? Okay, we did yesterday cruise down below opening price, but then we cruise back up. So if we're above opening price, what are we looking for? Bullish setups. And again, this one not perfect. But if you're in a form of continuation from London, you can use 8:30 a.m. as your opening price instead of 7. And then you can grab, you're looking for that framework. So it started doing it here. You've got a breaker snap through. So you could be long in this fair value gap. Here. Okay, so what are you looking for when you're in this fair value gap? You're looking for the framework. Doesn't provide it until here. Candle close above that guy. You're looking at your little volume imbalances here. Okay. This you gotta when you have these underneath where you want to open, you have to take these into consideration. They are very, very strong and very powerful as far as like strength and inefficiencies. This is your that I've noticed. It's stronger than a fair value gap, but not as strong as a new week opening gap or a liquidity void. So you know what I mean? Like once you I guess you yeah, it doesn't really work out there, but still awesome. Look at where this candle comes right back down to that guy there, all of them, before snapping to and through it. And then of course, no, not that one. Oh yeah, it was that one. I was aiming for that when we were started this. So here we go. We're starting to see the framework here for the idea of going lower. There it is right there. There it is right there. So now we're looking below opening price. Let's go back to the 15-minute. And that wick overlaps with that wick. So we got this here and this here, and then our equal lows. So our alien will be down here. So in the 15-minute, we don't have the framework quite yet. So we might get an up close candle to use as resistance in the next hour or so. Back to the 5-minute. So equal lows right there, inefficiency. So what does it do when it hits this here? Did it hit that body? Not quite yet. Let's mark out half of this wiki poo here. I also like the idea of it coming down to half this wick here, which was the breakaway gap in the 1 minute.
Hey, can I ask a question?
No.
Hey, dang it. That's the risk, right?
What's up, bro?
Yo, man. Um, when you said that's the sign that we're going lower, what was the immediate telltale sign that we were going low? I mean, obviously we can tell the set like there's a fair value gap, and we can see that the fibs are starting to show that we're at we're at the point where we're going to go lower. But I mean, what was the what were the things that were immediate like?
That right there.
Okay.
The closure below that candle there. That told me we were coming down here. So that right there offered 47 ticks so far.
Now, the fact that the body didn't close below half of that, is that sketch?
Well, yeah, we got an immediate rejection off that, right?
Yeah.
So that's one. Oops. So it's not like super duper, but there's a swing low there. So that's something to take a piece off at. You know, that Matilda hit the 40 tick objective. No big deal. And yeah. So we do have a bullish breaker here. Okay, so that guy right there could launch price. Right? So if you're short off this Matilda, you're taking your piece off at your matrix. Right? Because you want to see a volume imbalance, breaker, fair value gap, mitigation block, all snap through. That's what gives you the idea that you're on side, is you're blowing through bullish PD arrays. Just like this was blowing through bearish PD arrays. So that 1 minute freaking Matilda there that was ever so beautiful, right? You're just blowing through bearish order blocks through here. That's what it's crashing through, is all the bearish PD arrays you got. Bearish breaker here. You've got a fair value gap here. You've got a volume imbalance. I thought I seen one somewhere. Nope, not one. You've got a mitigation block right here. Okay, that candle's lower open and a nice bullish one. Right, so 1, 2, 3 PD arrays, and it starts snapping up for liquidity. So if you were short on this 786, let's say you were bearish. Right here. Okay, it comes down, breaks market structure, comes back up. Say you were bearish on this swing high. Okay, you're looking at your matrix. Well, we just broke through a breaker. You get your low, higher high, lower low. This should be a bearish order block. It's not. It was snapped to and through. So you're like, that's not cool. You also have cruised up through this fair value gap and closed over half of it. You've also closed over half this mitigation block. So that's not a high probability setup. So therefore, if you're long here and you were thinking about shorting this or closing, you're snapping through bearish PD arrays. So if you're short here and you weren't long here and you were short, you'd be like, you know, like ICT says, you break through 3 PD arrays and it's coming for you.
This is my first time doing a Zoom while actually having the charts in front of me in my workstation. What a game changer.
Word. Different strokes for different folks, I guess. Some people just want to play the game, other people want to understand it. Yeah, seeing a bearish Matilda off the 786 in the 5 minute and 1 minute. Yeah, let's see if this bearish order block here holds. That'll be our line in the sand basically for the short. Made a 1 minute Matilda, so it looks like it's gonna want to reach. So that PD array diagram also indicates the strength and mitigation blocks, breaker blocks, strongest. Yeah, exactly. Yes. Yes, this right here, there is the matrix right here. If you're bullish, you want to see your bearish ones rip to and through, and then that's your external range liquidity run. And just flip it if you're bearish. Thanks for posting that, buddy. Appreciate it.
Good shit.
So we'll still have this bearish order block marked out. I would like to see this swing high remain intact. Close an up close candle, and then immediately create a bearish order block and come for this fair value gap. So I was saying a few minutes ago how we could create an up close candle here before the rundown, because that's the framework we want to see built. So the 5-minute did it. So now we want to see the 15-minute do it. So we got what, 9 minutes left. Don't want to see that breached. And if we do see it breached, we'll be looking here for the same thing.
Hell yeah.
Wait till you see my headshot for Top Step. It's pretty dope. They wouldn't let me
Is
use
it a frog?
They wouldn't let me.
No. Too controversial or what?
No, they just want they're making me go on video and they're making me send in a headshot. So, you know, I asked. I asked, but they said no dice.
That's
I
sick. You're
bet you
all
have a hat
professional
on.
now.
What's that?
You're all professional now.
Yeah. Yeah, I made it on Top Step. I'm super pro.
Just paint your real face like a frog.
I know I was thinking about ducking my head and covering it with my hat, and then I just thought, "Ah, screw it. Just do whatever. I'll just do whatever. A little bit of exposure.
Yeah, man, that's awesome. Congratulations. That's so cool.
Thanks, man. I just hope the market's in my favor that Wednesday. I think it's Wednesday. And I just hope it does something like I hope it's not like totally tardy. I hope it does something like this for me. You know, like I don't want this to happen on that Wednesday. You know, even this would be decent. At least that was a little bit obvious. I hope it doesn't do something like this. Even that's kind of good, but I'm going on at 9 a.m. New York time.
Nice.
So yeah, so it's perfect for the stop hunt and the scam wick. You know, I just hope it's not something trashy like that. Even this is really tough to even that was really tough to navigate. So
Oh
it's
yeah, congratulations, friend. I got faith that the market's going to be in your favor whenever you go on there.
thanks, bro. It would be totally cool to just see me rip a trade on Top Step Live. Right. I sent it to ICT too, so he'll probably be watching. My armpits are gonna sweat.
You're gonna
Ooh.
have a lot of people want mentorships, man.
Yeah, especially if I hit a trade.
Just pretend you're with us and don't forget you're alien.
Yeah, no kidding, eh? Thanks, bro. So we could have an inversion fair value gap if we close underneath that in 6 minutes. That'd be cool.
If you're on Zoom, couldn't you have some replays prepared just in case?
Well, they're watching the markets too, Love Learning, but thank you.
Okay. Well, no, I don't mean to pretend that that's what's happening. I just mean as examples of your trading.
Oh yeah.
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 Maybe not.
That's it's all better to do it. Yeah, I see what you're saying. I'd rather just do it live. You know,
Yeah.
even if I fumble,
Yeah.
it's okay. But just to stick it to them, I'm gonna trade with my Apex account.
Oh, you're kidding. Wow. Are you really?
Yeah.
But oh no. Oh, goodness.
If you do that, you'll be my ultimate favorite person.
Wow.
It's happening.
So much for that lifer discount that you're probably gonna get.
No kidding, eh? So there's another bearish order block right there created. Oh yeah, inside the wick of this candle here, or tail, I mean. So it might not want to hang around here for very long. We'd want to see a nice rush right to this low here. Ooh, Timmy, what's up? Oh, thanks, DC Gen. Word up. Is the daily wick of Wednesday significant in your opinion? Yeah, got it marked out my chart. We're getting close. The daily wick, Wednesday's wick. Oh yeah, yeah, that's a rejection block, my friend. And it came up into a premium of the discount and made the thing. Right, so it came up into here, did our little reversal thinger, slammed down, created displacement, could have a possible bearish money printer model going on here. So this guy right there, I want to see that reject price if it wants to get up there. We closed below that 15-minute, so it'd be nice inversion fair value. Yeah, or no, we didn't. Well, the 5-minute did, not the 15-minute. It's still got 3 minutes left. So I was saying earlier, it came up to this 1-minute bearish order block. We'd want to see a rejection. Boom, mitigation block. Sending it down. I like this so far. See that wick taken out right there.
You're waiting for the framework, right, to enter a fair value gap?
I was gonna enter if it came up here and it didn't want to. So there you go. There's that wick taken out. I was gonna, if I don't get the trade, I don't care. Just the fact that I seen it happening before it happened is amazing. So I'm looking at these equal lows now. This was a wick in the 5-minute time frame. Consequent encroachment. Was it the 5-minute or the 15? Oh, was it the 1 hour? Jeez Louise, what's going on? No idea. Get rid of it. Too much everything on these charts. I don't like it. Right there, just a little more. But might want to come back up into here one more time before slamming into here. I'm gonna balance out this area with a touch to that wick maybe. One more push. Don't be shy. Right to half that guy. Boom, wick's taken out. Now we want to see her rush through there. Yeah, just like that. Bang. And so this is our draw on liquidity that we had, that 15-minute vacuum block. Fair value gap in the 1 minute. If it wants to come touch that wick, totally, or that tail, totally fine. We just don't want to see a sharp projection here. It can go up a little bit, but just not a harsh one. Snap rate for this guy right there. Not good enough. More. One minute, 10 seconds to close underneath that fair value gap. Almost there, and bink, target acquired. Now it looks like it's coming for this low now. Like it really does. I'm just gonna get rid of that. When you got really nice pushy candles like that, it just kind of signals external run. So anything inside this range here is internal, and this would be our external. So from this low here to this high here, we've met equilibrium. This is our slightly discounted prices. 20 seconds. We'd like to close underneath this. It doesn't have to. We've already got this one single clean pass through here in the 15 and the 5 minute.
Yeah,
Yeah.
I don't have time.
David's doing important stuff. So we got that close beneath there. We will allow it to come all the way back up to here if it wants. Even if it closes above that, that's fine. But we want to see this hold resistance here. Ah! Ah! Stabbed him right in the face. So where could we be going? Half that wick right there. I marked that off earlier, but I ditched it. We want to see a closure underneath that body if we're going to continue. So now that we've taken liquidity here, what do we want to see? Well, we don't want to see a sharp projection. We don't want to see a Matilda down here. We don't want to see that. So between the 30-second and the 3-minute time frame, do you have up close candles being printed? So 30 seconds to print a 1-minute candle bullishly. Our 1-minute candle to close above the down close candle is this guy here. So that would be our Matilda in the 1 minute. We also got this is technically our breaker in here. If we close below here, see, that's what we don't want to see. We don't want to see a harsh rejection like that. But in the 1 minute, oh yeah, it was this fair value gap. We can come back to this guy if it wants to. So that 1 minute candle closed here. I'll just show you. So we could be SR flipping that 5 minute fair value gap. Bearish money printer for the win. So the 1 minute made a down close candle in here after we breached liquidity. So we'd really not want to close a 1 minute candle above there. If we still got heavy bearish order flow here, we won't close above that guy. And we definitely won't close above that fair value gap there. We can come up here and touch it, but then I would like to see an immediate rejection if price wants to continue. And it doesn't have to. So we've reached equilibrium for the entire day. So we could just peter around here for the rest of the day as well. So that candle did not close above that guy. Let's keep that trend alive. 45 seconds to close underneath this candle here. And that will be our bearish breaker. And we want to see these fair value gaps up here remain open until our liquidity sweep here.
Remain open as in they don't go back.
Yeah, exactly. From what I discovered, and I don't know this 100%, this is just what I discovered from back testing my face off. Breakaway gaps are created and they don't get traded back to because they're above or below a breaker block. So that hasn't been defined by ICT. It's just something that I figured out. He'll probably have it in his books. So if you see a fair, like even go and back test it yourselves, go and see if it's true for yourselves. Go and find, and don't use CPI days. Don't use Fed release days, okay? Because breakers are prone to fail, and you will see those fair value gaps get priced too. Just our important days like CPI, unemployment claims, non-farm, and FOMC. Still no down close candles getting closed above yet. In the 1 minute. Came up and hit our breaker perfectly. It's still early too. Just got done spraying some stuff right on. Right on. So my extras little baby ladies came in yesterday. It was nice. Got a humidifier, so hopefully they start popping. No, no nothings yet. But everything's stable. So it's sweet.
Good deal. I use a little heating pad to speed it up some.
Yeah, maybe that's why I got my things on the floor of the garage, so maybe I'll raise them up. But I'm not doing it in paper towel, man. I just throw them right in the pots that they're gonna stay in. That's what I start them in for autos. No transplanting, no
Yeah, a little
topping.
bit of heat would help speed it up some. You know, with that, it would probably be a week and a half or so for it to pop out.
Well, I got a heater in there. It's freaking 24 degrees in there. Okay, we did get a close above a down close candle in the 1 minute time frame. So immediately we want to see this reject. If we're going to continue, we want to see it snap to and through that. Otherwise, we're looking above the marketplace for somewhere it could go to. Might want to come back up to here if it doesn't snap through that. And notice how it's not perfect, right? It's not any one of these. It peters on for a bit. It's definitely not perfect. Now, if we close this candle, if we don't smash through this down close candle here and we close it, above half, that would be a good inclination to close any short position that you might have open from here. So just like that, it's keep going, keep going. Don't respect it. 2, 1. Ooh, closed underneath half. So what happens here? Which way are we going? It's time for price to run. So we'd want to see this up close candle resisting that one. And we want to see a rush down here. We don't want to see another close above that guy there. I want to see it rush right for this low here. A little more. Stop them right out. Bink. A little more. A little more. Oh, yeah. Pull them right to half of that wick, please. I guess that's pointless to draw out now. All right, you can see how it just wasn't perfect. Not like we like to see. Like, yeah, it did it, but it wasn't right here. It wasn't right here. This would have been acceptable, but that was not acceptable. Right to our halfway point and bink. All right, did we get a sharp projection here? Or did we snap through it and come right for external? Yeah, keep going, baby. Harder. A little inefficiency in there. Another one here. So we got another gauge to run here. So now we're in our lower time frames. Just swept that liquidity by 1 tick. And there's your sharp rejection. Something you don't want to see if you were wanting to continue on. Got a vacuum block in there, opened higher than that close, hit the body, and then ran up. So this would be our inversion fair value gap if we continue up. See how nicer it is to call out candles and see the direction than it was yesterday? See how beautiful this is? Everything's smooth, everything's fluent, everything following the rules, doing exactly what we want to see. And that's just the difference between the 2 days. So we're still in our silver bullet area. We could see another shot down here, as a matter of fact. I really don't think it's going to come down to here, but then again, it could. Let's go to our 4-hour time frame and see what's going on down there. So we got a bullish order block and a fair value gap right there. That could be the draw. And we have external range liquidity right here. So if it wants to get squirrely, I mean, this is technically a bullish breaker here. No, it's not. Excuse me. Excuse me. Just that little inefficiency, you know, external range liquidity right there. So anything in this range here would be internal. Come right to our 786 perhaps. And that resides right in that inefficiency. That looks pretty cool. So let's mark out this 4-hour inefficiency here. Okay, if we're going to come down for external range liquidity, we'd want to see candles start resisting in the smaller time frames inside of there. What a bold color. So that's like our barometer. Swing high created. We'd like to see that price to right away. And snap to and through there. No support. I guess it kind of did. Yeah, it did. It already made it in there. And we're getting rejected. We'll see what happens, but looks like it's going to pull back just to snap down again. Nice slingshot. Close below in the 5-minute of half that inefficiency in the 4-hour. So looking like we could get another push down here. We also want to balance this range, so we're permitting price to come back up into that tail and that up close candle there. If it's going to make a lower draw on liquidity on a larger time frame, will the shorter time frame run up first? If it's going to make a lower draw on, sell side liquidity on a larger time frame, will the short? Yes, absolutely. For the manipulation phase, right? That's exactly what I'm talking about. If you've got a zone you're looking out for, okay? If you've got something in mind, something that looks stupid obvious, like these equal lows down here, okay? If you're targeting this in the higher time frames, you want to see a money printer, the framework built. You've got your stop punt, swing break, retracement, right? Now let's just pretend that this was Tuesday, okay? And you were targeting those equal lows. Monday jumbled around. Tuesday comes up. This is when we're looking for the thing, and then snap down for the equal lows for the rest of Tuesday, Wednesday, Thursday, into Friday, maybe. That's precisely what I was getting at this whole session. Framework. Is it doing what you want it to do? Go getting that push down. It's exceeding all my expectations, to be real with you here. And once again, I'm not in for the dump, but I seen it and I'm happy I did. Retest the daily open.
Now, friend, if your bias is so strong and you know that you feel that you're convicted is going down, why would you not enter? Like, I'm having trouble with that. That's still chasing. Like,
No,
I
man.
jump in right now, I'm probably gonna get 15 ticks. I'm not gonna do it. I'm just saying.
look, just because
That's what I'm having trouble with, man. And I don't know if I can call that FOMO.
what do you having trouble with?
Like right now, I had a projection of 16,905 when it was already dropping and it was like at 16,947. Why wouldn't I jump in? Granted, I could have gotten in way at the top at 1,700, but you know your bias is going down there. Why not jump in halfway through the move?
I mean, I drew the breaker as it was happening. You know, that was a perfect retest of a breaker. Snap to and through bearish order flow, snapping through bullish order blocks, retested the breaker perfectly. I mean, why not?
Okay, so I'm all right. I just want to make sure it's not FOMO.
Yeah, no. Here's the difference, bro. Okay. Here's the difference between somebody who's chasing and they don't know where the market's going and somebody who has a general idea of where the market may likely be headed to based on the logic of inefficiencies to liquidity. Okay. You're not chasing price, you're being very strategic. So, although this dumped here and you might feel like you're chasing it, you're still playing a breaker. So, forget that you've seen the Matilda in here. Okay. Two of them. Forget that. Okay, say your model was just the breaker. What's wrong with entering halfway? What's wrong with that entry? There's nothing wrong with it. You're being very
So
strategic. You're reading price action. So there's no FOMO. That
I think I'm
FOMO,
having trouble. I think I'm having trouble with the fact that like I'm too hard on myself. I can't seem to give myself credit that I'm actually getting this shit. And it's like when I make the right decision, it's hard for me to believe I'm doing the right thing. I don't know why.
because you're conditioned, bro. All that bullshit that you've been going through in crypto in the last, your entire trading career has conditioned you to be, a chaser. You were seeing the markets as buying and selling pressure and not the inefficiency to liquidity paradigm that you're seeing now. So when you're doing the right thing, it's like you need some sort of outside source to tell you that you're doing the right thing because you need to hear it to believe it.
Yeah,
It's hard to believe in front of your very eyes that it's doing exactly what you want it to do. I know exactly what you're feeling, bro.
I'm intimidated by my own freaking like realization. It's crazy.
Yeah, man. So like the fact that you're seeing it is phenomenal. And like even today, bro, JSOL, I took 2 losses on my live account and stopped trading it. I'm not butthurt. I got stopped out twice up here in this garbage. I thought it was going to continue on and it didn't. Stop me out twice. Or maybe it was one big trade. Either way, I got stopped out and I quit trading. Right? It's not a gut punching loss. It was only a few contracts and one was, I think, a break even stop. I didn't harvest any ticks out of it. And I quit. I quit trading. So I lost professionally today, you know? And even though I seen this happening long before it even happened, started the live with the alien down here. I don't need to trade it, right? And neither do you. Any of you guys. If you lose and you're telling yourself you're done, stick with it. Don't continue on, grab, especially on your live accounts. So grab an eval and start punting it. Who cares? It's, they're dirt cheap on with Apex. So that's what I was doing. I was playing evals today. And left my live account alone. And I don't care that I lost on it. Okay. And that's something that I've just taken a shine to the last few months is really learning how to lose properly. So the point is when you see a direction, stock price. It will give you a much larger sense of accomplishment for when, next week's is going to be stupid, but for when the next week is in your favor and it's going to be really nice and fluent price action, then you have that experience of reading price, of it going in your favor. And yeah, I totally did long a premium market, and I thought this might have been the silver bullet. It wasn't. No big deal.
Thank you for that.
You're very welcome. But yeah, as far as that goes, you're just getting used to this. You're feeling the excitement now of being able to see direct market direction. That's amazing. That's amazing progress. And when it's in your favor, it's in your favor. But another solid point to make is that when you can't see the market for what it is at that moment, learning how to stop trading is, top rank. But also, don't look at terrible price action days as a failure on your part. Okay, that's not healthy. Okay, the algorithm will play out and it will do what you want on days that it's permitted to. On days that it's not, you can't look at that as failure or an inability to read price action. You are reading it. You're reading that it's effed up that day. That's your read. So it's not going to work out. Do you know what I'm saying? Yeah, some of you guys are terrified of success. Absolutely terrified.
And then it's hard to believe, like, damn, I worked 50 hours and I'm doing this in like an hour. Like, it's like, what the hell? The power of time.
Amen. So I'm just gonna throw this out there. And I'm gonna say we could be drawing towards the first standard deviation of Asia's range here, which has some equal lows in here. I want to see it punch right through there, and not respect that order block in there. There's a little fair value gap in there too, but well, looks like we're getting some sort of movement here.
And not to get too woo-woo about this, but what Fit is saying about, having worked 50 hours and what you're saying about the fact that this is built into us, there's something called epigenetics, and which is like, this is on a cellular level, that time, like you're saying, Fren, we've been conditioned that kind of generally speaking, that we, our self-value in an hour, how could that possibly be valued at $500, $1,000, $10,000? Because our fathers and our fathers' fathers worked, hours for 50 cents and $100, dollars for a month. It's in our DNA, it's in our cellular memory, so to speak. So we are literally dismantling it slowly here. And that's thanks to your trading psychology that you're teaching us. And that is, in the middle of all of this. So I know, I really want to thank you.
You're very welcome.
Yeah, thank you.
Yeah, this is the majority of what I'm doing here is all smart money concepts, right down to the psychology part of it. If it wasn't for his constant tough love or consistent tough love approach with his students, this would never have happened. So shout out to him. And
We all thank you and thank him for being your mentor and teacher. It's a blessing.
yeah.
Yeah, thanks, friend. 100, buddy.
Right.
Yesterday I made what a week's salary would have been.
On your Express account.
Yeah, on Express.
Attaboy. Right on, bro. Right on.
Today will be day 3 of positive.
That's awesome, dude. That's so awesome. Runners active, stop loss at entry. I want my target hit. Dang it. I missed out on a milkshake earlier this week by 3 ticks. Well done, everyone. Nice. Attaboy. Look at you go. I hope that was your own trade and you weren't taking mine. So I see a Matilda here with a fair value gap. It looks pretty dang good. It looks pretty dang good. Let's look left and see what liquidity we just breached right there. Just breached liquidity. There's Matilda. I'm going to get rid of all this. I'll go to my 5-minute. Grab the entire impulse there. And there you go. Fair value has a fair value gap. So that's something we could be targeting. Off that Matilda right there. It's 236. It can still continue downward too. So we're going to close above that candle. We'd want to see that hold. So look at how nice this is compared to this, right? This is how I was able to determine we were going to continue on down. And, you know, this is giving us a high likelihood of at least coming up to equilibrium. And we'd want to see down close candles now supporting down close candles. This would be our breaker, little baby breaker in here. So we've closed above half that. So it's looking highly likely that we come up at least into this fair value gap here. At the very least, this is all balanced in here. So that's in the 1 minute. Let's check out our 5-minute. So we'd want to see this down close candle closed above in the next 2 minutes and 50 seconds. Just stay here so you can watch that play out. Look at how beautiful it is. Look at how perfect it is. It's like, hey, Jesse, I'm going to go up now. So we've just dipped into that double top. We wouldn't want to see if we're long here, which we, you know, got a highly likelihood that we're coming up here. We'd want to see a nice sharp snap through that liquidity. Because you know, all these chasers that chase this dump, they cram their stop loss at these selling pressure wicks and that double top. We want to see it just snap out here.
Hi, Fren.
So, buddy,
Question. Like every Friday, can you tell me in how many hours it's a Bitcoin Zoom session?
it's, you know, maybe 2 hours, sometimes 3.
In 3 hours, you mean?
Oh, no. Oh, dang it. Is that
Because
now?
I'm
No, it's not. At 5 p.m. 5 p.m. New York. So in 2.5 hours.
okay. So I have a problem with the time because I'm living in Europe. That's why every single Friday I'm like, what time is it?
Always 5 p.m.
5 p.m.
Is your
in
chart
UK.
set to New York time yet?
Yeah,
I mean,
yeah,
it's-
yeah, yeah.
Yeah, all right.
But for me, it's like 40 past 8.
Oh yeah.
So that's why in 2.5 hours.
Oh, it's
Okay.
gonna be a little late for you then.
Yeah, yeah. But tomorrow, I'm so happy about tomorrow session.
MPV, it's posted in the purple chat too, so that if you need to reference it, I just thought I'll let you know that.
Yeah,
That was a
no,
very
I
nice
know.
post, by the way, Love Learning.
Oh,
Yeah,
you're welcome.
great one. Great one. Okay.
It'll
I
be
won't
11
disturb you.
o'clock, buddy. You got this.
Fib's the champ manager. He's the manager of champs all over the world.
This is exciting, man. I'm not making crazy money, but I'm sorry, I'm loving this.
Yeah, it's pretty fun. Oh my gosh, the 4-minute made a good Matilda. Really clean. Yeah, it's fun when the days are doing what we want them to do. It's a lot more fun. There we
My
go.
wife just got me one of those things you can put on the wall that sticks and you could write like with a Sharpie, like an erasable marker.
Yeah, nice. So we got to close above that down close candle, found support on it. See if we get up there. We would like it to dip into here if it wants. We permit it to come back this far. But we'd like to see that swing low remain intact. No, Roberto, we'll do all that stuff tonight at 5, bro. All the leverage stuff will be in a couple hours.
Someone just went for 55 contracts long.
Oh, they're chasing it, eh? So I'd like to see that rated. Nice snap here. We'll just rush right through it. Come right for these equal highs, maybe. So that fair value gap in the 5-minute time frame has been repriced too. Boom. So what happens here? Do we get a sharp rejection or we snap through and come for this other fair value gap in a premium? So that was our equilibrium. Take that fib again just so you guys can see. You know, you make the thing, right? You're targeting equilibrium or a fair value gap and fair value. And if she wants to get angry, just snap through this bearish order block. Come right for this guy here. Back down to the 1 minute. And we closed above half that sucker. So we can come back down to here. That's fine. If it wants, we'll permit it to. And there's another little fair value gap in here if it wants to touch that. Notice how it hasn't closed below that guy there. So we're still in continuation. We closed above the breaker now. So that down close candle could have been purchased. Fighting these guys here, this big chubby one specifically. This is where bullish order flow will snap through this guy. See a nice rush right to this green guy here. Ten seconds. Hit half of it. So we want to see this candle rush. It can go down first. That's fine. Still the manipulation phase of this 1 minute candle. That's fine. Hit that wick there. That's cool. Maybe it wants to come to half that wick, which is that guy there. But we want to see this candle has to rush. Yes. Bang. Target acquired right there. And boom. That's how you do it, ladies and gentlemen. So just from our pretend entry here. And it offered 247 ticks just in that little move there. That's a decent payday. You know, if all you needed was 40, that's a very high probability that algorithmic, very high probability trade. Just if you're after 40 ticks. Once you get comfortable, once you get cozy with this, you can go in with 2 contracts. So we closed above half this guy. So we just overlapped with that wick. We got another little fair value gap here. I wouldn't consider that a unicorn, nor that. But it could get another shot up here.
Can you show me once Fibonacci on this 1 minute? Are you taking wicks?
Okay, so when I'm grabbing the wicks, primarily, I'm just looking at market environment. Okay, so that would mean discount or premium market. But when I'm looking for entries, I'm predominantly using the bodies. Okay, so there's a difference between the market environment and trying to find entries.
Why do I ask? Because every time when I'm using bodies, it's working like most of the time.
Yep,
And when I'm using wicks, it's most of the time not working. That's
correct.
why I'm asking.
Yeah. You are correct. So like this guy here, for example, if you were looking for an entry, your 786 wouldn't have been hit. But when you pull from the bodies, your 786 was hit. So 2 times to enter there, take it to liquidity, say la vie. But when I'm measuring out the market environment, that's different. I'm pulling from the entire range of that impulse. So that'd be the discount, premium, equilibrium, or fair value. So we're looking for shorts in a premium and longs in a discount. Yeah. So this is our bullish mitigation block here. So we would want to see in the next 53 seconds in the 5 minute close above half this guy and flip this one into support. So it's the opposite as our bearish mitigation block. So we're using the body of the down close candle. So we'd be using the body of the up close candle here. Another 30 seconds, close above half of that at the very least. Transposing that into the 1 minute time frame. We're now at our bullish order block here. So if we want to continue up, so did we dip? We did. We did dip into liquidity here. So we do not want to see that close, that candle close below. We want to see it remain closed above here if we continue up. So that 5 minute candle, yes, we got to close above. So we'll allow it to come back down to this wick. That's fine if it wants to. But then an immediate rejection. They got their 40 ticks on 55 contracts. Unbelievable. And that's a self-fund too. Like people who are going in with savage contract sizes are not playing prop firms. I'll be right back. Smoke break.
Hey guys, this is TR. I've got a question for you guys. I don't like bothering Fren. I'm trying to get Top Step hooked up with my trading view and looking through a bunch of videos, and that it says that I should just be able to use Tradeovate, and I'm struggling with that. Anybody got any pointers?
Oh, buddy, have I gone through it? You got the right guy.
I knew
So
it.
if you go to your dashboard,
On Top Step?
yeah,
Mm-hmm.
you could press where it says launch Tradeovate. Log in there.
Where is
And then
that?
on the top right, you're going to see like 3 little buttons or slashes. You hit there and go to add-ons.
Okay. And then
And
I
then
hit
if you
Tradeovate
see,
once I'm in there, right?
yes, launch Tradeovate, go into there. Then on the top right-hand side, once you're logged in, you're going to see like 3 little buttons. You hit that and there's going to be an add-ons option. Once you go in there, you're going to see trading view. You have to make sure that's active or it won't connect the two from my experience. And man, have I had a lot of issues.
So are you, you know, we're buying our funded account through Top Step. What is Tradeovate? I mean, you know what I mean? I'm completely computer illiterate, obviously. But
I'm with you on that,
what is it?
honestly.
What is it that makes it like the go between Top Step and TradingView?
I think of it as a bridge. It's connecting the two together. I suck at computers. I've learned more
Okay.
about computers when I started this journey than I had my whole life. But I believe it's like a bridge to make sure both of them are working together. Maybe Master
Tradeovate's
Frank
the
can answer
broker.
that.
Tradeovate's
you
the
go.
broker.
And so then what do you classify Top Step as?
The prop firm, they use Tradeovate and a bunch of other brokers, so you get to
Okay,
pick when
so
you sign up.
that's just a prop firm.
Correct.
Got it. So then too, it said, excuse me, you know, once I had gone through that and I was on Top Step on the dashboard or whatever, got into it where I picked Tradeovate. And then it says at some point, then when so I don't have to like sign up for Top Step and give them all my information and everything, or I do and become whatever, join.
I don't understand the question.
Well, when you sign up for an eval, you give your name and email, but you don't have to give all your KYC till you are funded, right? Am I correct, Jesse? or fit?
I still haven't
I'm
had
not
a
funded.
cash out. I wish I could answer that because that would mean I'm making money, but
Okay.
I think I gave it to them all at the beginning when I did that. I'm pretty sure. I
that's
can't really remember, but I think I put all that stuff in at the very beginning.
that's a good question because it didn't ask me for my social or my banking information. Just give me your credit card, let's go. So once you're actually trying to get a payout, what info do they ask for?
That's it. Whenever you actually ask for a payout, that's whenever you would give them whatever you're going to send it to. You know what I mean? It's like an ACH transfer is what it is. I
Okay,
haven't
because I'm
got
sure
that
they're
yet.
gonna want to tax me somehow.
What are you Santa?
Whenever you do get that, they make you go on to LinkedIn and set it up and do that to get your whatever it is, the award or I don't know, certification, I guess.
Look at that big scam wick there in the 1 hour. How hilarious is that?
At that bit.
It's hilarious just a bit, eh?
What? That bit.
Oh, that's funny.
How come I could see that wick on the 1 hour and not the 1 minute or the 5 minute?
I'm gonna let you stew on that question just for a little bit.
That was funny.
You're expanding all the information inside of that 1 hour candle when you go into the different time frames. So you won't see a wick. You'll see a bunch of
I don't know. I don't know why I asked that actually. I think I got too many screens.
So yeah. Oops.
Damn. It's going for my angel.
Sorry for the dumb question. Is this session now you're on your regular schedule? I keep missing exactly when you start. How can I best know? Yeah, Love Learning's got the schedule posted for the leverage mastery. And that's in 2 hours. So speaking of which, if we close above this fair value gap in the 15-minute, it's highly likely it's going to want to come for this order block here. And it doesn't have to, but not expecting anything phenomenal for the rest of the day. Yes, right here. Sundays at noon, New York. Tuesdays right after Sammy's live. Fridays at 5. Thank you, Love Learning. Oh, thank you, MPV. Thank you to both of you. So we got the 26 regular troublemakers in here. That's awesome. That's awesome. I'm so happy you guys showed up today and yesterday. You get to see the difference in how nice the candlesticks are on days when you don't have freaking unemployment claims.
So I'm trying to get one of those signs that says open or on air, like when someone's actually on the air. So I can turn it on when I'm allowed to trade and turn it off when I'm not.
Right on. Just a little sneak peek on Bitcoin here. Didn't quite hit that high I wanted to see. However, it did remain intact. So it is Friday. So let's go to BTC1. Check out the futures chart. And it looks like we'll hold that swing high for the week on the futures chart. I still want that low. I was targeting that low until the daily time frame made a bullish order block here. Wow, just ugly in this here. Let's go to back to our index where it was a lot more cleaner right here. Nice bullish order block, dipped into liquidity here, snapped up, daily time frame, gorgeous order block. like gorgeous. I longed that sucker, woke up in awesome profits, took them. I was aiming for these equal highs here. Just closed the trade here, took the lion's portion of that sucker, and it was a phenomenal trade. Even though I was aiming for the lows, whatever. And that's actually a good way to wrap that up. You know, if you have a bias and you are expecting a direction, you want to see the framework. But if you see the framework for a bullish setup, you're looking above the marketplace, equal highs, bearish order blocks for a means of an exit, right? So I was completely offside here. Tuesday made the high of the week. So personally, at the time, it looked like it was the high of the week. So personally, I wanted to see price continue on down for the rest of the week. I didn't get that, right? We got our bullish order block here. And yeah, it was decent move. But the point is, when you have a specific expectation of what you want the markets to do and it doesn't meet those, you're offside. So I hope I can, you know, I hope that's just as simple can be. We got a nice big long idiot box here. So it's generating liquidity below and above the marketplace. So I'm expecting both sides to get ripped on. So we've got framework for a bullish setup here. And we just got rejected by this fair value gap here. Maybe we hit this order block. Kind of dug into that breaker a little deep. We're waiting for one side of the market to get rated first and then go for the other. So whatever way that happens, we'll be counter trading that original idea. Okay, bud.
Let's not be quiet and hit the back.
Oh, my little boy. You nailed it. Love learning word of the day. Framework. Absolutely. Absolutely. Yes. Peace out, A's. Have a great rest of your day, bro. And yeah, just back to the NQ for one more second. We couldn't get a close above half of that sucker. So we'll see what happens. Even in the 1 minute, couldn't do it. Got rejected. Bearish order block here. Maybe we come for equilibrium. Fair value gap there. Mitigation block here. Volume imbalance right there. So we'd like to see a rejection. If not, that'll get snapped to and through and use the support. Thank you for joining, everyone. God bless you guys. It was a great tape read. Appreciate you all for coming. You're very
Thanks,
welcome.
Fren.
You're very welcome.
Thank you, friend.
You're very welcome,
Thanks. See you
guys.
later.
We'll see you in a little bit. Have a great day. Word up.